Hey, Randy Schrum here. Welcome back to Wealth Influence. Now, in today's episode, we're going to be back interviewing Bill Broadus, and Bill's going to be teaching us about Fibonacci and Fibonacci ratios. And this is amazing information. And so, what I want to do is, I want to encourage everyone, if you have not yet, make sure that you subscribe to our email list. That way, you can find out when we have these special interviews. Now, there's no cost to join this list. There's no cost to watch this video, but this will allow us to keep you informed of what our interview series is doing and who we're bringing in to interview on how to build wealth. And building wealth is important, and how we influence our communities and our world and our families with that is just as important. And so that's why the title of our website, the title of our episodes, Wealth Influence, is really important. So if you're the type of person who really wants to influence their community, their families, and their friends, and this world for positively with wealth, then make sure you join and subscribe to our community here, because this information is just amazing. In this interview that we're doing today with Bill, I think it's just amazing because we bring in Bill to talk about Fibonacci ratios, and when you look at it, you realize the magnitude of this interview. You realize the magnitude of, yes, Fibonacci ratios can help you build wealth, but Fibonacci is everywhere we look, everywhere we see things, both here in this world and in the universe, and so it's something to ponder on beyond just building wealth. It's something to ponder on just how this all came about. So with that said, let's go straight to the interview. Make sure that you join our community as well. Talk to you soon. Well, hey everybody, Randy Schrum here again, and I want to welcome you to this special interview today. I'm here again with Bill Broadus, and this interview is going to be just tremendous. There's a lot of things that we're going to be covering regarding Fibonacci, and this information is just mind-blowing. So we're going to be getting it right into it. So Bill, thanks again for coming back in and sitting down and sharing this information with everybody.
Sure. Excited about doing it, Randy.
Okay, so what are we talking about, first of all, when we talk about Fibonacci?
Well, Randy, Fibonacci is just one of the tools that we use with our technical analysis and trading, and we've found that the Fibonacci concept, the golden ratio, the different tools related to Fibonacci are a powerful tool for us, and they go back to this gentleman, Leonardo Fibonacci, back in the 13th century. He was a mathematician, a researcher. He actually traveled and studied the pyramids, the ratios of the height to the base, the width of the base and stuff. A lot of powerful information that actually turns out carries into a number of areas of pretty much everything.
Right. So that's, I mean, when you were beginning to tell me about this, I started to look at the information, and it's mind blowing. So my audience here today is just going to be blown away. So I cannot wait to get into this. So what is Fibonacci and what is its origin? So why don't you share with them a little bit what you've got here?
Well, Randy, a couple things we have to go back to is numbers. It's mathematics, like we talked about with Leonardo. And it starts with a summation series, and it goes into a golden ratio. And sometimes people can start hearing these things and they're like, "Oh my gosh, this is overwhelming. I'm not a numbers person." But what we try to do with our teaching is we try to make it simple. Instead of a person having to read 10, 20 page of text or so many chapters to try to get something, we've tried to make things very visual. So actually, we brought some of our teaching slides along today to show people, give people idea the origins and how vast this Fibonacci concept and theory is.
Okay, great. So what are we looking at here on the screen?
Well, like I said, Randy, it starts with a summation series, and essentially we're showing people so they don't have to try to understand, well, what is this exactly? This is the series of numbers of the basis, the foundation of where this Fibonacci and the golden ratio comes from. You can see it starts with the simple as 0 plus 1 is 1, 1 plus 1 is 2, 1 plus 2 is 3. It takes the sum of and adds it and keeps going on with this summation.
And this is what Fibonacci discovered.
Exactly. Well,
okay.
This is the beginning of it anyway.
Beginning.
We're going to continue to show you some more here and show you where this comes from. Then he found that this geometric progression, this numbers turn into it actually and show it as a geometric progression here, and it's also found through nature and many other things that we're getting ready to show you on these other files too. But we just want to show you how this progression actually looks on paper and how it actually continues to progress. And people might say, well, I kind of recognize that spiral. It looks like something I might have seen in nature, like a nautilus shell.
Wow.
Where we can see right here and how that comes about.
So, Bill, what we're looking at too, first of all, I mean, amazing presentation here of just what you're breaking down. Mm-hmm. Where did you put this together from? Where is this from?
Well, this is part of our teaching that we have, that we help students with. This is, again, to visualize.
Okay.
So just say, okay, how can this numeric summation progression, how does that apply to nature? How does it apply to different things? And they can actually see here. We want to make it, again, something where they didn't have to try to visualize or read out of a textbook how it works. We wanted them to be able to visualize and see this progression.
Well, awesome job. So,
and the application of it.
So the golden ratio here.
The golden ratio is actually when you get about, I think it's 7 or 8 into that summation series, we start with this golden ratio, which is a key number with the Fibonacci. And you can see, again here, we want people to be able to understand how that actually comes about. And again, I'm not going to go into great detail here, but this is from our teaching. You can see where the numbers are actually derived from and how they come up to the golden ratio of 0.618 or 61.8%.
Now, this 61.8% or this 0.618, this shows up a lot.
All over the place. And we're going to show people that even now. Again, with our teaching, we go into more detail and more explanation of this, but we just want to give people an idea, what this looks like with these slides. So we're just going to go on to the next ones here and show people, again, where the 618, how it looks in different aspects of the world.
Okay, great.
Before we even get to the financial part of it. Of course, it is, involved. You can see it throughout financial history if you study charts. But in addition to that, you can see, like we're talking about here, the crash of 29. If we go another slide, you're going to see an animation here showing, wow, we actually had a retracement here of 61.8%. There's what we call a Fibonacci tool we use with trading, and it shows a retracement of that same golden ratio number, Randy.
Wow.
And amazingly enough, anybody that has maybe studied a little bit of it before, they realize that it's actually in the human body. The human body is actually comprised as a basis of these ratios also. You can see the summation series, the hand and the different things, fingerprints, the progression, the nautilus type swirl. And here we go. Somebody will say, well, that's great, brought us for stuff here, but what about a bigger picture? Well, how much bigger can it get than the universe? We actually show here, the Milky Way, different things. We had that same type of spiral effect with, that we showed with the geometric progression on that before.
And we can identify the Fibonacci sequence right here.
Right there. You can see it. The same thing. And people might say, well, okay, that's fine, but well, what about hurricanes? Okay, then take it back. What about sunflowers, nautilus shells we talked about, and so on and so on, different plants. I mean, again, Randy, we could spend a lot of time just talking about all the different vast things where this golden ratio. And again, Fibonacci didn't create this. I look at it again. I've told you before. To me, it's like God's fingerprint all over everything.
Right.
And anyway, you can see here. It's kind of hard to deny when we start showing pictures of this progression and this how it looks geometrically here.
It's amazing. Patterns are everywhere, and
Mm-hmm.
You're showing it in just different areas. And now patterns also exist in the financial markets, and that's what we're talking about here with the Fibonacci ratio is that these patterns show up in the markets.
Yeah, they show up very nicely in the markets, Randy. And some people might say, well, they're kind of subjective. Well, it depends on the understanding that people have of them. The better they understand them, the more applicable they're going to be for them. And the key there is to have a person who has done research who understands how they work. And we're going to show you some of our slides just to show you how it does apply to the different financial markets.
Awesome.
Well, and actually we're going to go another step here. We show you we went all the way from a universal standpoint all the way to hurricanes, so on and so on, but even on the molecular level here.
Yeah, the DNA structure actually has a 61.8 sequence as well.
The same type of helix in geometric progression, sure. And then, okay, so applying this Fibonacci numbers to the markets. Of course, the golden ratio number is 618 or 0.618, but there's different derivatives and different numbers that go along with that we can derive from that 618. As an example, the 786 here that we use with our retracement tools, that's actually the square root of 618. And these different numbers have different, mathematical ways that we come about, using them. But what we found, Randy, and again, you can come up with a lot of different numbers, but these are some primary numbers that we stick with, that we have set the others somewhat aside, and we focus because we found that these carry a lot of weight.
Okay.
And what this chart here is, this is a larger chart. I believe it's a monthly chart of the stock market. And we start down here. I believe we start with the crash of '87.
Yep.
We drew actually one of these what we called the Fibonacci retracement tools, starting down there all the way to the top when the market had peaked out. Actually, you know what? This is from back. This is historical, but again, you get the same concept.
Right.
We draw down to right in with the drop off the cliff there. It goes right down to the 61.8 level there.
Oh my. So I mean, what we're seeing there is a support. Right?
Exactly.
Right?
It's these lines. What they become, Randy, are lines of support and resistance. Lines of horizontal support and resistance.
And so when we look at this in a chart, in relation to the charts, oftentimes on these certain numbers, there's a lot of support and resistance within these ratios.
There's something that people definitely keep an eye on, and we're going to show them. Some people might still be skeptical, but we're going to show them again how it looks with some more charts. We're going to show you in just a moment here.
Awesome. Let's take a look here. So what are we looking at here?
Randy, again, this is a little bit more of a breakdown. I believe that last chart that we had, actually we might want to go back just for a moment.
Okay.
Because I see where we're at here. This was the point leading up to the crash of '87. And you can see the price hit a peak here and it dropped down to where? Right in the area of the 61.8, the golden ratio. Now if we go to the next slide, you can see that chart that we just saw there was this little blue area right down here.
Okay.
So what we did, Randy, was once the market hit the other high in 2007, we started at that 61.8 retrace, and we drew it up to the top of the high that hit back in 2007.
Yep.
And then, of course, we know that we had a crash then, and from there, the market again crashed, and where did it go down to? Almost exactly to the 61.8 level right there.
Wow, look at that.
Exactly. And I know a lot of people
what else are we looking at here? I see a couple dots and.
Well, Randy, we also we do some other work too, because again, fibs are one thing we use. They're a powerful tool, but they're just one tool that we use, because we also have different chart patterns, a number of different things, moving averages, a number of different things we use. But for this specific talk today, we wanted to kind of focus on Fibonacci. So anyway, that's we're seeing some other things here. I did have some other things highlighted.
Yep.
A large head and shoulders pattern here on the stock market that we identified. And again, since then the price has continued on. But at the point, that was something that we were watching at the time.
Well, maybe I'll have to have you come back in studio and talk about Head and Shoulders, because I can see here something that's happening with Head and Shoulders that may be a clue for where the market's headed too.
Something to be keeping an eye on.
Right. Okay. So maybe you can come back in and share that with the audience as well.
That'd be great.
All right. So great. So what are we looking at here?
Well, Randy, this is a totally different chart. Now this is we're going to shift over now to the Forex market, and of course Forex market deals with currency pairs, and the pair that we have here is the pound dollar monthly chart. In other words, each one of these, and I know I've got this greatly compressed here, but each one of these little candles here represents a 1 month time period. And what we've done here, if people remember from the first talk that we did, the first video, we talked about Fibonacci's. We were discussing the Dow and we were discussing gold, and I brought up the point of the power of drawing Fibonacci retracements in three wave encompassing fibs. And if you can see right here, we start up here with this particular Fibonacci retracement tool. We have wave 1, wave 2, wave 3. Now realize this is a monthly chart, so we're talking all the way from 1980, I believe it's around November of 1980, all the way to 1985 down here. There's three waves, and this Fibonacci encompasses price for quite some time, and you can see how the price historically continued to bounce off various levels here, and you see how it worked. And matter of fact, if we go to the next slide maybe, actually, you know what, we're going to switch over to another set of slides, and we're going to elaborate even more so on that then.
Okay, great.
But you can see the historic support and resistance levels from that fib. And this, what I did, Randy, was I put together even a few slides here just to even break this down even more and show people how this can work with from a technical analysis standpoint. If you look at this chart right here, you might say, okay, well, again, we have the pound dollar chart here with the Forex market, and this is a daily chart that I just put together last night. I made a snippet of it, but we have a pretty major drop off right here. And a person might say, well, the price is going along here, but how can I identify that something was getting ready to happen here?
How would you know?
Well, how would you know? So what we're going to show is kind of some of the reason that we use from a technical analysis standpoint to analyze charts such as this.
Right.
And I just want to show people a bear chart because it looks like, how would I know? What would give me some clues? But again, our topic today is Fibonacci's, so we're going to focus specifically on Fibonacci's. Now, there are the tools we use that we incorporate because that we talked about in video 1, we like to build the case.
Right.
In other words, build a case for the bias of the direction of the market.
That's it.
Okay, and so what we're going to do, I just want to give people a kind of a plain chart here with nothing on it except our candlesticks. And let's go to the next chart, Randy, and we're going to show them. Well, first thing that we notice here is that we have an area of resistance up here. I've drawn a red line across here.
Yep.
And we notice that the price came up, hit it, came up and it hit it again, and it hit it again. It actually went past it. And Randy, if you remember from our first video, I mentioned a book that a mentor of mine from many years ago, turned me on to. It's How Charts Can Help You in the Stock Market by William Giler. And he goes into great detail in this book, and he has actually a chapter on what's called traps. Okay.
Yep.
Now we know that people are going to see this up here, and there's going to be people that are going to place pending orders here to go north because they think, well, that thing might break north.
It broke that resistance.
Yes, it might break north, so we want to make sure that we have an order in place there so that if it breaks, we're going to be in the market to go north. Well, that's what the markets do to trap people. They will run this price up, cause those long orders to be entered, and they will snatch the price back down then and trap those people. And that's what we have here. And this, again, the candle here we have is what we call a spinning top. It's similar to a shooting star type candle, which is a reversal type candle at the top of an entry. And since this is the third point of hit, that's another thing that we think about, as far as that this could be a move down from there. Again, because remember, when we're watching this real time, none of this here exists yet. Okay, I wish I almost had a paper I could put it across here so people could see, but all we see is this particular spinning top right here. Well, what we do is we typically wait for a candle after that, which will confirm that
another
this is
period,
another candle right here, which is another day passes, and if the candle happens to be red and closes below where this candle is, that's a confirmation for that spinning top to show us that this is probably a reversal at the top.
Right.
So we have a couple things. We have the line of resistance. We have our trap area, okay, which is another indicator that it may be going, heading south because we got the market has those longs trapped, and then we have a confirmation candle. But Randy, we don't, if we wait for this candle to close, our entry is going to be down here, not the best entry necessarily. So something else we know by studying another book that we mentioned on our first video, the Neeson book, Steve Neeson books, powerful books, is that typically a large red candle, the center point or the 50% area of that is typically a point of support or resistance. And in this case, it would be a point of resistance as the price will come back up to it. Right. So once again, there would be, from a technical analysis standpoint, again, we're not making any buy, sell, hold type recommendations. We're just talking and teaching technical analysis here to say, hey, there would be a potential point of entry that a person might want to consider after they've considered all other things too. But again, today we're focusing on fibs, and I'm just giving some people some it's a little other ideas that we're putting in here with the fibs. So there's a potential entry area right there, and a potential agreement. None of this exists right here yet, but the price is pretty aggressively starting to go south here. But Randy, if we just go to the next slide, we notice that there's this point of congestion, or this point where the price is starting to oscillate.
Right. There's just a lot of bouncing around right there.
Some bouncing around right there that I drew, and you can see within that purple circle right there. And people might say, well, why? When that price is dropping so hard there, well, naturally it might do a retrace, but why is it starting to bounce around that area? Okay. And what we do again, if we just go to the next slide, I believe, Randy, we're going to try to answer that question. If this line that you happen to see that just appeared across here, what that is the 38.2 line. Okay, do you remember when we finished up that last set of slides before we finished with that big monthly chart? The chart with the fib that was from 1980 to 1985 is about a 28-year-old fib.
Right.
This is the 38.2 line from that fib.
Here, let me grab this. I can actually show everybody that too. So it's this one right here that they were seeing. So I can even probably increase the screen size a little bit. So this one right here. So this is that 38.2 line.
That's the the 38.2, correct.
Okay. So this is a chart that's a monthly chart that dates back to when?
From 1980 to 1985. That's when the fib retracement was actually the start and the finish of it. And we actually have the numbers inverted there. It says 32.8, but it's actually 38.2 line right there. Right. And if you look closely over here, you can see That's the number that's actually from that Fibonacci right there.
So these can, I mean, I just want to take a step back. I mean, we're talking about something where you can identify these patterns with Fibonacci ratios, and these things will transcend time. They will stay around for years.
Well, Randy, I guarantee you there's a lot of people out there that want to argue with me. And as I've told you before, I don't sit and argue with people. I just say, hey, well, let's start pulling charts up, because we've done so much research. We've actually got hundreds of charts where we've shown that these historic, encompassing three-wave fibs carry that much weight. Where they, typically people will use Fibonacci's for right now, for the here and now. In other words, if they saw this line here, they would draw a start and a finish here and say, okay, well, there might be a fib there might be a fib line that may have something to do with a retracement here, okay? But what we do is, we use these historical fibs. We do that also, but we also use these historic fibs to say, okay, there might be something happening here. Again, I didn't wait for this congestion area to happen and all of a sudden I had that fib. I already had that fib, this monthly fib, drawn on, locked on my chart, and I've been using it for the last few years.
Right.
Where we can see these different points and say, okay, it's coming down, and more than likely, as that price drops, it's going to encounter some, something with that fib line right there.
And Bill, I noticed something here, and I'm a novice here. I mean, but I noticed that after it really breaks away from that support resistance, it really took off south.
Exactly.
The moment it actually decided, there was massive movement from that 38.2.
Right. Once it broke through, once it made the oscillation, and again, there's some more reasons we're going to talk about here in another couple of slides about this oscillation movement, but just from a large mountaintop perspective, looking at that, mini 28-year-old fib, there's that 38.2 line, and we're expecting, something. There's going to be something that happened around there. And a person might look at that chart, like I said before, that plain chart, and say, okay, well, it dropped, and there was a point where the price just kind of oscillated back and forth a few times. But here's some something that went right through it. Of course, the price found some support there in different areas here. They just kind of created a support and resistance area with congestion and oscillation area there.
Awesome.
And again, here's what I did was I actually magnified that monthly chart. Before I had it pretty compressed, but here where we have it magnified, you can actually see better the wave 1, wave 2, and wave 3 of that, and the start and end points from 80 down to 1985. And you can see right off the bat, kind of interesting, even after that, right around 1987, the price retraced up almost to the pip of the 61.8, which is a typical retrace that you would expect. Again, back to our first set of slides, Randy, the golden ratio.
Man.
So
and now just you've dropped a lot of gold nuggets, and I hope everyone's listening, because you talk about one of the things that you prefer is three-wave fibs. You like to really identify three waves when you draw your fibs.
Well, what we do, we use them in other situations also, but to be very clear here, we have found that Fibonacci retracement tools placed over a clear three-wave run carries a lot of weight. It definitely carries a lot of weight.
All right.
Okay, so we move on to the next slide then.
Okay.
All right, and again, here's the same monthly chart that we saw, and again, it's compressed, but I just want to show you, here's that 61.8 where we just saw in the previous slide. Yep. This is more compressed, but again, you can see there's other points too. And a couple other points I wanted to show you, Randy, that are very relevant is, remember, 1980, 1985, 17 years later, that price had fallen hard and hit to the pip, to the very pip. 17 years later, the price hit there and then bounced, substantially off of that point.
It did. And then, I mean, I'm just looking at the chart here, and consistently, I see that the 23.6 is pretty good, strong support right there.
Oh, exactly, Randy. Yeah, exactly. That is the 23.6 line. And then the price, of course, it rose substantially, okay?
Right.
And it dropped off a cliff again. 23 years later, it comes down, and of course, there's a lot of momentum here, so it actually pierced the 23.6.
Right.
But it came back up and then, again, bounced and moved forward from the 23.6.
So even hypothetically, let's just say I'm a Forex trader, for instance, because we're looking at a Forex chart right now.
Right.
And let's just say I'm in that position, and I'm going to take your arrow for a second.
Okay.
And I'm over here, and it starts going south, and I start asking myself, where do I think it's going to end up? If I looked at the historical pattern of this Fibonacci, and this thing's screaming south, I know that there's a potential where that it might hit some really strong support once it gets to that 23.6.
Well,
but that's just part of the puzzle.
That's part of the puzzle, Randy, because we will actually watch this again. Until this happens, we don't know exactly.
Right.
But what we do is we start watching. We watch for areas here,
Yep.
here, and here. And I would bet we don't have this area broken down in smaller charts, but I'm sure that you're going to see some interesting activity around these particular areas too. But here's the key, from this area right here, because we were actually involved in the markets right here.
Mm-hmm.
When you combine this 23.6, first of all, the price had fallen so far at that particular point in time. It was so, oversold at that point. But also, we have horizontal support there from a previous bounce. So you start adding, again, we start building the case again. Okay, we got the fib lines there, but we also have a strong line of horizontal support there. And there's other things that we put together to, again, build a bias. We don't want to try to say, well, here's what we think is going to happen. What we think is going to happen is meaningless.
Right.
We have to stay neutral and let the markets tell us, let the charts tell us, and let them build the case for us of what the bias for the direction is.
And it's a really good point too, Bill, because one of the things you were telling me early on is, Randy, you need to remove the emotion out of the equation.
Yes.
And not trade off of emotion, but trade off of what the charts are saying.
Right.
Right.
And
I think that's part of what you're even kind of alluding to here is follow the charts.
Exactly. Because we go into, and we try to give people examples of that in our teaching modules also, like an example I gave you before about a pilot, when they become, how important it is for them to follow their instruments as opposed to following their feelings.
Right.
Because one of the main ways that that people die in plane crashes, especially small pilot or small plane pilots, is they can be in a death spiral, okay, where the plane is spiraling and the centrifugal forces got them pinned to their seat, and even though their gauges are telling them, dude, you're going down, they're like, no, I'm pinned to my seat. I know that I'm climbing, okay, so they ignore the gauges until they hit the ground. But if they say no matter what I feel, no matter how much I feel like I'm pinned to my seat going up, I know I'm in a death spiral. I've got to stop this and get out of this. Mm-hmm. Okay, it's the same way with traders. You have to put the emotion out of it, whatever you feel out of it, and you need to focus on what the charts are telling you, even if it's not what your body wants to tell you or what you feel or your feelings are. Put that aside and look at the charts.
Right. Face the reality.
Face the reality. Exactly. So if we go to the next chart here. A person might say, okay, well, Bill, was that a fluke? Okay, you got this monthly fib. You can't use that thing forever, maybe. But do you have any other examples? Well, again, we have a weekly chart here, and again, I want to show you from a weekly perspective. First of all, was it just this particular point of congestion? Because again, let me back up a second here and show you. This is a weekly chart. Here's the daily thing that we just the spot that we just showed you with the red horizontal resistance.
Right.
The peak, the bottom, and here's that time of congestion, but from a weekly chart perspective. And again, if you follow that same monthly 38.2 line, you can see it was relevant even on the weekly chart.
There is a lot of support and resistance
areas
all across there that we're looking at.
Correct. And again, we can go on to the next chart now, and I'll show you the next. Okay, and like I started to talk about, was that just a fluke with the monthly chart? Well, let's go ahead and look at. Let's go ahead and go to the next slide, and I'll show you. Well, let's pull up another historic fib. And again, we don't have like hundreds of historic fibs we just slap up there and say, well, of course the price is going to hit one of the lines. We don't do that.
No.
Okay. But what we have here was, I actually went and we went to the weekly chart and found a historic three-wave fib on the weekly chart. And we drew it in there. And this, if you can see, our numbers over here are actually aqua colored this time. And you can see, again, here's our same daily chart with the pound, our trap up here, and the price starts falling off, our retracement. Here's our congestion area that we saw with the 38.2 line. I removed that monthly 38.2 line so it doesn't get confusing for people, but I left the purple area circle to show the area there. But you can see, first of all, I want to point out, Randy, up here at the top of this historic weekly fib now that we found, a three-wave residual price encompassing historic fib. The 78.6 line of that particular weekly fib happens to be exactly on top of, or right at that, our red dotted line, our point of resistance before.
Okay.
So again, the historic fibs play a role here. And you can see the 61.8 line. Sometimes people, or a lot, most traders, they say, well, the price is going to retrace to the 68.18, but historically, we find that those tend again to be areas of support and resistance that carry forward through time. And again, you can see how the price, again, in these aqua colored circles, reacted to this historic 61.8 line, and then so on here. until we get down to the bottom. And notice where this price, after it dropped over 1,500 pips here, where did it stop and then reverse at? The 23.6 line of this weekly fib. It pierced it slightly again because of the momentum, and then bam, bounced right off of it, and again found a resistance area right there.
Wow. There's so many this is just very telling, and I know the audience is loving this information, Bill.
Well, we're throwing a lot out here, and I hope it's not too overwhelming for them. But this is an example of how we use the Fibonacci theory and principles with the financial or different markets that
I think it's great. I think by you providing this kind of training and free information, it's undeniable. It really does exist, and it's really a pattern that's out there. Now, everyone would agree when we you shared the ones about where Fibonacci appears in nature and DNA and all that, and everyone would not ever doubt that.
Right.
But for some reason, when it comes to the charts, the financial charts, people would go, you have these people that are opinionated and go, well, no, it doesn't exist. But we just looked at countless information that proves it exists.
Absolutely. And Randy, there's one more point here, one more slide I wanted to just show. Actually, let me see. This here is actually a picture of that weekly fib.
Okay.
You just saw the lines on the daily. Well, I pulled up the weekly chart so people could actually see. Here's wave 1, wave 2, and wave 3 that we decided to place the aqua colored fib. That's this one right here that we placed over that 3 wave, and here is how it has actually reacted. Again throughout. This is back in 2010. This is just before, actually 2011, and then in 2012 how the price reacted to that fib, and the price is still reacting like you just saw in that previous slide on that daily chart.
Right.
So we can go one more here. Now, there's one other thing I wanted to show then.
Okay.
And again, Randy, I don't want people to think that Broadus has got 100 of these fibs all over the place, and there's no way the price can miss it. It's not that way. But what we did was, again, we went and tried to find just one more fib to see if there was any other explanation for some of the price movement that we saw here. And this is a fib that we have had drawn on our chart, these 3 fibs, for quite some time. And I did not go ahead and draw this other fib on here, the whole fib. What I did was, though, I pulled out the 2 relevant areas, because remember our congestion area that came down here, and we're like,
yes.
Why did that thing oscillate like that?
Yes.
Well, of course, the aqua colored fib, the 3-wave fib on the weekly, showed this, but there was one other fib, and it was not a 3-wave, but it still had some relevance. Then here was the 38.2 line from that fib where the price oscillated before it continued on down. And here's the kicker, Randy. The reason that we felt that the bias for the price to get stopped here, because listen, we besides the technical analysis, we're always researching different analysts and doing different research and listening to what different analysts are saying from their studies. And when this thing started dropping like this, people are like, well, look, there's no, but on this point, the horizontal resistance, it's way down. It's down way 4,200 or so. Okay, right. 1.4200. But see, we already had these fibs, and we're like, aha. We knew from our aqua fib that was up there, the 3-wave weekly, that we had a line here. But from our other weekly fib that was substantial, it had its 61.8 line lined up exactly on top of the 23.6 line from this other weekly fib, which we have a double fib line there. And we're like, after this thing's gone down 1,500 pips, and we got a double fib line from substantial fibs there. That's a pretty tasty point there to be, to really, again, you have to always look at all the other indicators. You always have to use proper money management and everything else. And again, we're not trying to give any buy, sell, hold, something like that. But this is, again, we're teaching technical analysis here and showing people, this is how we would use it. And this is what we have found with our research. Now, we've done a lot of studying how other people use Fibonacci's, but this is how we have honed in on what we find strictly from the school of hard knocks, what this thing, what we found works.
Right.
So this is our final chart, Randy, but we thought we kind of put everything together here, showing how, this resistance we've got, it's all fib lines here, how the price movement react all along the way from start to finish with these Fibonacci levels. So we went kind of all the way around big circle, but here's where we ended up at to show you the relevance of the Fibonacci principles and theory to the financial markets and different markets.
Well, Bill, I know our audience is loving this information, and here's the thing, when it comes to trading the markets and whatever you're trading, you have those people who are technical analysis driven and those who are fundamental driven, meaning they go off the news. And I love what you said in the first video where we were interviewing together, and you said that the fundamental is the fuel for the technicals. And I just want to encourage everyone to keep that in mind, because you are sharing some just golden nuggets around technicals.
Right.
And so what I want to ask, though, while you're sitting here is, will you come back in and record a special session on actually just the head and shoulders? Because we've seen that both in this video and in the first video, I believe. And so I know our audience would love to get, pick your brain on that specific topic too.
Sure. Right. And we've done a lot of research again on that also, Randy, because it's a great top reversal and bottom reversal pattern.
All right. Well, I appreciate it, Bill, and I know everyone else does. So, guys, thanks for stopping by. And if you love this video, make sure you comment below. Also, share this with your friends, your family, whoever else, because this is incredible information. I mean, just ask somebody next time you see them, hey, have you ever heard of Fibonacci? and then shock them with this video, okay? So, thanks, everyone. And, Bill, again, thank you for coming in.
You're welcome.
All right.